Hello everyone, this is Yoko. On this channel, I feel that information about what is happening in China is often not correctly conveyed to countries other than China, so I will be disseminating the information I have gathered in English. I'm getting information from multiple media, so I'd be happy if you could comment on the content of the video. Also, my native language is not English, so I use an AI speaker to create the voice to convey the information correctly. If you like it, please subscribe to the channel and support us. Last time, I told Krugman about the future of the Chinese economy. Contrary to Krugman's view, investors around the world appear to be optimistic about future growth, given the recent rise in Chinese stock prices. There may be grounds for such expectations. While looking at the Seng index, I would like to think about events and stock price movements in China in the past, and what happened after that. When China was doing a zero-corona policy, there was a feeling that the Seng index had fallen sharply and that the Chinese economy would come to an end. After that, there is a sudden rise. This is thought to have risen due to expectations that the Chinese economy would be revitalized by lifting the zero-corona. Contrary to expectations, however, it has been declining due to widespread anxiety that the recovery may not be possible. But the stock price has been rising fairly quickly recently, which has given me some optimism again. Although the short-term price movement seems to be rising sharply, the movement is still unstable when looking at the 5-year chart. According to some media reports, the Seng index has recently risen in hopes that the communist government will come up with new policies to revitalize the economy. Rather than some aggressive economic stimulus being announced, it appears to be a way to loosen various brakes. For example, it can be considered that they are thinking about activating real estate buying and selling. In other words, since there is no accelerator to step on, it is expected that the brake will be released instead of the accelerator. With China's economy in a slump of late, you might wonder why there are still mechanisms in place to put the brakes on the economy. There are actually quite a few mechanisms. In China, if the real estate bubble grows, it is believed that it will eventually burst as a major problem. Therefore, there are various mechanisms to suppress the real estate bubble. Currently, we are trying to prevent a sudden drop in real estate prices by gradually loosening the mechanism. Whether or not it will work remains to be seen. Let's go back to the historical behavior of China's stock prices. Looking at the 5-year chart, it peaks in February 2021. This is in the midst of the coronavirus, but stock prices have been declining ever since. Therefore, there is no doubt that the extreme policy of zero corona had a bad impact on stock prices. However, I think that the reason why the Chinese economy is currently in a slump is the reason why stock prices have fallen. The real estate sector, which accounts for about 25% of the Chinese economy, is in trouble. This is greatly influenced by the policies of the Communist Party. And the other is that most of the IT-related companies that were attracting funds especially in the Chinese stock market were sluggish. This is also the policy of the Communist Party. The Chinese Communist Party has restricted the flow of funds to the real estate sector and put a squeeze on the IT industry. In other words, the deterioration of the Chinese economy has a clear trigger of the Chinese Communist Party's policies. For example, after the Chinese Communist Party announced that it would restrict the flow of funds to the real estate sector, and after the crackdown on the IT industry began, we can see the policy and its impact. First, the crackdown on China's property sector took place in April 2020. After that, in August 2020, 3 policies called red lines were announced. There are 3 red lines, but there is only one inside. If a company in the real estate industry has a large amount of debt, the bank has a policy not to lend to the company with a large amount of debt. China's real estate sector is highly indebted, and the application of this standard will make it very difficult to borrow new funds. After the system was announced, it was said that China's real estate industry would be in crisis. Experts must have understood the importance of this, as it is equivalent to the total volume regulation in Japan in the past. And if a major problem occurs in the real estate sector, it may spread to other sectors. Real estate developers work with many different departments, so when a problem occurs, it can have far-reaching consequences. But if you look at the Hang Seng Index, after the announcement of the 3 red lines, the stock rose to a 5-year peak. In other words, it seems that those with the expertise expected that this policy would have a significant impact on China's property bubble. The Xi Jinping administration would have thought that this policy would put a big brake on the real estate industry. However, contrary to expectations, the stock price rose. By the way, it was in the second half of 2020 that the Xi Jinping administration began to tighten its grip on IT companies. This was triggered by an incident in which a company called Ant by Jack Ma was planning to go public in the United States, but was cancelled just before. After that, the restrictions on IT companies became very strict. Also, in 2021 after Ant's delisting, steps were taken to ban app downloads. This tightening was not aimed at Jack Ma, but was targeted at IT companies in general. At that time, China's political risk was underestimated, and DiDi's stock price rose by about 30% after being listed in the United States. Stocks are said to factor everything in, but China-related stocks probably didn't fully factor in political risk. Back to the chart again. What has happened to the stock price since Ant's delisting and the Xi Jinping administration's tough stance on IT companies? In fact, the stock price has continued to rise since then. In other words, even though the Chinese Communist Party launched negative policies on the Chinese economy, stock prices are rising. After that, although it is thought that there is also the impact of Corona, the stock price has fallen due to a combination of various factors, and has plummeted to the lowest level in the last 5 years. Therefore, even if the stock price is currently rising, it cannot be asserted that it indicates that the Chinese economy will turn around. Based on past data, we cannot expect that. It is highly likely that the Chinese economy will face severe conditions in the future. Even if stock prices are on an upward trend, institutional investors will take geopolitical risks into account when taking positions. In the end, it may be general investors who buy at a high price. Chinese stocks are creating a mood that is about to rise, but it is necessary to determine whether it is an intrinsic rally or agitation by the Communist Party. People who think it's time to buy now have entered the market, but those who can analyze it will sell away when the stock price rises. Even if there is an article that Chinese stocks are doing well, there are many investment destinations in the world because investments related to China are high risk but not high return. Personally, I don't think there is any reason to choose Chinese stocks. That's all for now. See you next time.